Okay, I'm Eric Ness. I'm the Wisconsin Director of the Small Business Administration, and we work with a lot of these lenders up here, so we're excited to hear from them and hear some strategies on financing your business, financing your expansion, financing your working capital needs and all of that, and maybe hear a little bit about wealth management too. So at this point, we're going to kind of open it up, and what we want to do is kind of hear a brief introduction from each of our lenders here, and you can hear a little bit about them, and then we really want you to have the opportunity to raise questions because you have them here, and so be thinking of a few questions of what you would need or information you would need. So I think we'll just start right here and turn it over to Tim. And Tim, kind of explain who you're with and kind of what you do and what kind of things you're looking for. Sure. So Tim.
Thanks. Can you guys hear me? Good afternoon. My name is Tim Belter. I am the SBA Program Manager with Summit Credit Union. Summit's got about 49 locations throughout Wisconsin, primarily in the Madison and Milwaukee areas. We do all sorts of different financing options for borrowers. So traditional lines of credit and loans, as well as SBA loans, full suite of account products, deposit products, cash management products. So.
Good afternoon, everybody. My name is Mike Hetzel. I'm the Director of Lending for WIBIC. It's the Wisconsin Women's Business Initiative Corporation. And next year, 2025, will be my 40th year in this banking thing that we call banking. So spent about 25 years in the Milwaukee banking community before coming here to WIBIC about a dozen years ago. And we do loans up to $350,000. We are a CDFI. And what a CDFI is, it's kind of like a bank, but it's not like a bank. And we don't offer, for example, deposit products. We don't offer savings, checking, merchant, any of that kind of stuff. But we do loans. And overall, if you look at the big picture, WIBIC is kind of like a three-legged stool. We do education, one leg, and we do about 400 to 500 classes a year. And those could be either virtually, they could be on demand, or they could be in person. And we only lend in the state of Wisconsin. And our education classes, we also participate in something called VBOC, which is the Veterans Business Veterans Business Outreach Center. And basically, we work with active military personnel at this point that want to leave the military and get back into doing something maybe from a self-employment viewpoint. So we teach them how to do business plans and whatnot and how to do projections. And the third part of the stool that and get lending, we do loans up to $350,000. And then the third part of the stool would be our business coaching services. And the business coaching services, we lovingly refer this into our world as technical assistance. And really that is kind of like the juice that makes our loans work. Because most of the folks that come to see us, probably 60 to 70% are startups. And they've never done this before. And people that come to see us like a lot of hand-holding. Or else they're folks that were referred to us because they went to their bank for the sake of argument. And they just didn't fit in that banker box. Maybe their credit score was too low. Maybe something happened that it just didn't fit right away. So we work with those folks, and then hopefully within 3 to 4 years, we get them back to the bank. They pay us off, the bank, and then we revolve the money back out again and help somebody else. So, we're kind of a short-term solution. We're an incubator. We're kind of a mentor, but we do lend money.
Okay, Mike, they said introduction of you.
Just
I was going to say that. Besides the names are different, my name is Therese Cairo. I am with Legacy Redevelopment Corporation. We are also a CDFI in Milwaukee, Wisconsin, and we also have an office in Racine. We do the same things that Mike does, minus the veterans. We don't work one-on-one with the veterans. We let WIPIC handle that. We're all like a team in this. Everybody tag teams and does their part, does their role. Maybe the major differences between us and WIBIC are the types of loans that we do. We probably do a lot more in the real estate market, but we do small business loans. Anything small as a micro loan, all the way up to a commercial acquisition rehab project and everything in between. For us, technical assistance is more important than a loan because we feel that without that TA, it could potentially slow down and or hinder your sustainability and growth. So it's a requirement for us that all of our loan clients work with our business consultants in areas that we have identified that they need support in, that they have communicated to us that they would like to have support in, with the ultimate goal of getting them bankable. Because CDFI loan clients typically are not bankable people. There's some type of blemish or something on your credit report. We try to help you resolve that so then you can go to one of our banking partners.
I didn't know you were part of CDFI. Hey, girl. Okay. I'm Mikai Brown. I am with U.S. Bank. I am part of our Access Commitment Program. We have one of the largest community benefits plans. No, we have the largest community benefits plan in financial history. We committed $100 billion to the community. And so I fall under our Access Business Program. So my banking job is to ensure that Black business owners get access to capital. So I partner with our CDFI partners, the SBAs. Are you a CDFI? Okay. Well, I would partner with BMO too. So if we can't do a deal at U.S. Bank, I could work with BMO as well. But I primarily work with our CDFI partners and credit unions when our business owners are having a hard time getting traditional financing. I would work very closely with these individuals to get our business owners on the right footing. And you're probably like, well, why would you work with someone else? Well, CDFIs are like banks without deposit, so we would still own that deposit relationship and work very closely with you when you graduate out of that CDFI relationship. So I'm here to ensure that you can navigate the banking system, that you can navigate your financial partners, that you understand all the resources that are out there, and I'm excited to give you any information that you need.
Hey everyone, I'm with BMO, Denise Pachuca. So BMO, of course, does a lot of the traditional lending that other financial institutions do. So we do commercial lending. We also do small business. But I'm going to focus my time today talking about our Zero Barriers to Business program. This is a program that we launched in 2020, specifically to aid our underserved communities and entrepreneurs who self-identify as a Black entrepreneur, woman in business, Native American, or, hold on, did I miss one? Latino, right? What I am. And what the program is, it's a 3-pillar program. Specifically, it started as a $5 billion 5-year commitment, and we pretty much deployed the funds by year number 2. With our most recent acquisition, which means that we grew from 8 states to 32, we have now made an additional $40 billion commitment over the next 5 years. The program itself has 3 pillars. One of the pillars is our first micro lending program. We actually expanded our credit criteria to allow for people who would not fit in the conventional space to get access to this line of credit. It's a max of $50,000. You do have to be in business 2 years plus, and as well as self-identify as 51% owned by one of those segments that I mentioned previously. The second pillar of the program is access to free financial tools and literacy. So we actually partner as well as deliver a lot of that financial literacy right at the bank. And we have a lot of free financial tools available right on our BMO.com page. The third pillar of the program is access to partnerships. So I work a lot with places like WIBIC, where we will do partnerships specifically to bring financial literacy with the hopes that a lot of the clients that we're helping and are coming into to our bank to get that access to capital, that we're helping them graduate into traditional lending, because that's ultimately what we want. Most of the customers that are coming and taking advantage of that line of credit are first-time entrepreneurs even accessing capital. So we want to continue to educate and get them ready so that when they're ready to get that real estate or additional access to capital that they need because now their business is growing, that we can graduate them into that other space. I hope that kind of covers it. There's a lot of other things that we do within the program, which I hope to cover throughout the the conversation today.
So what kind of information do you need to access the program? I noticed your booth, you had some of the handouts there. I assume some of that information is in that, but I was just kind of wondering what, as a small business owner, is it an online app, or what kind of questions are you asking?
So, like I mentioned, it's the program is available within any state where we have a footprint. So pretty much any of our branches, all of our branch staff has been trained to be able to help customers coming in to actually take that application. So it would be done in person.
Or more?
Up to 50,000 via a line of credit. If a customer is looking for more than that, then we would be looking at either small business. If it's anything over $1 million, then we would be working with our commercial team to help with that loan.
Yeah, before we go on, any questions yet? Okay, sounds good. I'll bring this over.
Thank you. Hi, my name is Corey Robinson. I'm the CEO of DNA Global Transport. We're a trucking company. So a couple of the CDFI members mentioned that your clients are bankable with traditional banks. So in order to join your CDFI program or take advantage of your resources and loans, do you have to be referred by a traditional bank?
No. So who we typically work with are businesses who are not bankable. So there is maybe an issue, blemishes on your credit, maybe cash flows aren't sufficient. Maybe you need some assistance with tightening up the structure of your business. There's normally something there that if you were to go to a traditional bank or a credit union, you would not meet the underwriting criteria. But there's no invitation. We are available when you call, email, and then we would set up a time to have a conversation with you. You want to say anything?
That's basically it. But the one thing that I did want to add is, WIBIC does a lot of education classes too. And, most of those education classes come to you as a client free of charge. So it's really, really good to take advantage of that, especially if you're exploring the possibilities of becoming an entrepreneur. Classes we offer for, do you have the spirit to become an entrepreneur? What type of structure does your business need to be in? How do you write a business plan? How do you do projections? How do you do all that stuff? How do you market? How do you distribute? We have tons and tons of classes. So they're all available through our website. It just depends, when they're offered, and you sign up for them. And I would just encourage everybody, if you have any interest in business and business education classes, to go to our website, because there's going to be something out there that I think you could take advantage of.
Yeah, I've seen businesses start off I think your traditional thing is you start off and then you kind of grow in where they become either a credit union or a bank loan down the road. But I've also seen businesses that have been in business and may have hit a rough patch and have come back and have worked with the CDFIs to help that situation too. So they really play a big role. So thanks. And I think we were going to have Tim talk a little bit. Tim, what kind of things do a lender look for? Say I wanted I wanted some financing. What kind of questions, or what should I be prepared for to come in?
Sure, great question. It really depends on the deal. I think most of us are all going to ask for the same thing, regardless of what you're looking for, whether it's a equipment purchase, building purchase, line of credit. Kind of the basic things we'll all need is 3 years of personal tax returns, personal financial statement. If it's a relatively new business, projections are generally required. Offers to purchase contracts, those sorts of things for the asset you're purchasing. Sometimes a business plan, if it's a brand new business, that's really, really important. And the thing I tell our customers about business plans, you're not writing a novel. It's not going to be published. It doesn't have to be hard-covered and bound. But there's a couple basic elements that should be in there. One is just background of the business. What kind of business are you in? What are you looking to do? What do you want to accomplish? Next thing, a little bit about the owners. Your experience in the industry, management experience, those sorts of things. Look at your competitors. Who are you competing against? Who are you going to outsell? Who are you going to outperform? Those sorts of things are important. And again, projections can be can be part of the business plan, it cannot be part of the business plan. Some people include it, some people do them separate. The one thing I think we kind of struggle with as lenders with projections is the assumptions piece. Is it? Is that better? Yeah. Okay, sorry about that. Okay. With projections, again, the assumption piece is really important. There's a lot of times, I think we all see projections and they're just a set of numbers, but explaining how you're going to get to that level of revenues or what level of expenses you need to hit those revenues, those are important elements of the projections as well.
Do we have any other questions before we go on? One thing, of course, we had just heard from Aaron, and he's on our panel too, but we have him back here. So we learned a lot about business plans, which is interesting. But you talked about something altogether different, which was a financial plan. So can you kind of tell us the difference there and why that's important?
I see. Well, a plan is a plan is a plan. On the personal side, we just talked a fair amount about it. For your financial plan on the personal side, I would say that the same structure applies on the business side. It's just different words. So earlier we talked about discretionary income, right? In the business, that's on the personal side. On the business side, it's net operating cash flow, right? It's all the same stuff, right? So if you kind of think about what you want in terms of your vision and clarifying that, that's A1, really important. I think from a business perspective, what will be next is figuring out your infrastructure and how you're going to communicate to your team. I see founders struggle with being able to let loose of the reins a bit and trust their team to do their job at a high level. And if you choose to do that, that's your choice, but what you do is you compromise your ability to own the strategy. And if you're not owning the strategy, and if you're not going out fostering relationships and driving the bigger picture, what will happen is you won't be able to experience the scale and growth that you desire. So we talked about earlier before when I mentioned the internal rhetoric that occurs. So my mom used to say, if you want something done right, you absolutely. And that voice of reason would impact my ability to be a wildly successful business owner, as an example, because I then have to do multiple job functions instead of focusing on the strategy. I mentioned it earlier. This is the next point. I mentioned it earlier where I don't know where this came from, but advisors have said to business owners, zero out your income. So that means if you make $100,000, depreciate $100,000, show zero, and pay Uncle Sam nothing. That is short-sighted. If you do that continuously, when you experience accelerated and rapid growth, the growth that you hope for, and you want to now finance something or get working lines of credit because you have these large contracts and you're on a 60-day receivable, a 90-day receivable, a 120-day receivable, guess what you don't qualify for? The working lines of credit to be able to sustain you, the 9 payrolls to ensure that you can get the job done. If that occurs, then what do? You're tapping your cash reserves, you're tapping your credit cards, you're tapping your assets to be able to help you meet that contract expectation. Does this make sense so far? Okay, good. I think another thing that's really important is I see founders shy away from making the investment. They say that they want to have technology to drive innovation within their organization. They say that they want to expand and buy the next equipment, but I also see them, it's the weirdest thing, like sabotage themselves from actually doing the stuff that they know to do. But what's going on is there's an element of fear connected to not having the cash reserves. And so you don't feel confident in taking action. And it's like this tug of war stuff between the stuff that you know that you need to do to scale the business versus the stuff that you need to do to be able to maintain it. And it's a very evil exchange internally, and I've seen it derail people greatly. Here's the last thing I have for you. I see founders get really excited about the big contract. Awesome, $10 million contract. But they didn't think through financially how to make that work. So I'll give you an example of a founder that we had a meeting with a few months ago. She just got a $75,000 line of credit. She said, I want to do $10 million in revenue. Great. Follow-up question was, what was your revenue for last year? The answer was, I got to talk to my CPA. Was that the right answer? Absolutely not. She should 100% know what her revenue is for the year, like that, right? Next question. How long does it take for you to get your account receivable? I got to think about it. Is that the right answer? Absolutely not. If you do work today, and if it's a 120-day receivable, you should know when you're going to get your money. 1. 2, you should also consider a variance in that time frame. If it's 120 days, consider 140. I don't know, 130. I don't know, to give some wiggle room because life happens. The worst thing that has to happen is you look at your employees who are trusting you with their livelihood, and then you can't make payroll because you didn't financially project appropriately. Does this make sense so far? Okay, perfect. So what we did for her was, if you are going to, $1 million, great, congratulations. $10 million, great, congratulations. How much of that is going to be in January? Well, I should be able to do maybe 2 deals in January. Fantastic. How much money are you going to make in revenue per deal in January? Well, the average deal size is about 50 grand. Fantastic. So you're going to make $100,000 in January. Is that correct? Yes. When are you going to receive that money? April. That is correct. So what do you have to do to cover January, February, March, April 15th? It's tax time. I don't know if we're going to get compensated, to be able to ensure that you can sustain that quality of life for yourself and your employees. That was for January. Then it was same exercise. How many units are you going to sell in February? 3. Awesome. When are you going to get those funds? May. Right? Great. How many units are you going to sell in March? Does this make sense so far? And then when you understand your projections, what then happens is you know your gap. You know the line of credit dollar that you need in December to carry you through to the following year, April. And so for her, it was $300,000. And guess what? When you have $300,000 and you can float yourself for 120, 130 days with no stress, guess what that allows for you to do as the founder? Be more strategic. Do you see how it all comes together? Right? But I see founders compromise one operational element of the business for being strategic, for operating costs, for sacrificing cash reserves, and all of that is a mess, and if not managed well, you go out of business. Does that make sense? All right, so I'm going to pivot to the personal side because that was the question. When you zero out, you also sacrifice your ability to put funds away for retirement. And founders tend to be very humble, very self-sacrificial, very much so visionaries. And what I hear from founders often is, I'll live tomorrow. I'm going to run hard for my family today. Oh, I'll take a vacation tomorrow. Oh, I'll live life. I'll have fun. I'll spend tomorrow. Oh, yeah, it'd be great. I'll sell the business, and then I'll come into a lump sum. I'm a billionaire. And I've seen founders compromise their life being dutiful, which is fantastic, but then also in that process of being dutiful, did not take the time to make yourself a priority, to automatically contribute to the retirement savings that's going to sustain your life when you are ready to transition. Is that fair? So those are the things that often come up, and these are the things that we're always combating against. Last thing I would say is be coachable. Like these folks on the panel, like They got experience, and they've seen a lot of people, and they have portfolios of 100 people who represent you, just like you, talk just like you. And one of the things that's frustrating for us is we'll give you the advice, and then you all dismiss it, right? We're sincerely trying to help you, and that's another thing that we see very, very often. So those are my thoughts.
That was good. Aaron described a great way of you can actually get too much business and go out of business if your accounts receivable take over. And basically, remember, when we've got 120 days, 140 days, all those days out there, you now are in the banking business because you're financing your customer to on their receivable. So it's something to consider because cash flow is king. You got to work the cash flow to make sure those funds are coming in. One of the things, and before we go on, I always want to make sure that, are there any questions?
Can I add on that cash flow piece? Oftentimes we are asking for funds when we don't need it, when we need it, and when we're out of fear and desperation. And I just want to urge the audience, because I sit in the seat with our business owners all the time when they're in need, like desperate need, like my business is going to close in 60 days if I don't get funds. That's like way too late. Come to us when you don't need money. When your business is booming and you think you don't need money, this is when you come to the bank. When your business account has commas, that's when you come to the bank and you ask for funds and you get your line of credit. Get a line of credit. It does not matter because you only pay interest on the money that you spend. Okay, fine, you pay a maintenance fee, but who cares? Because when you need it the most is when you don't qualify. So, and probably when you need it the most is when you are overextended on all your credit cards, your credit probably took a tank, and if anyone's ever told you anything, your personal credit depends heavily on if you get business credit. So I was just talking to my coworker just now. I'm like, man, my best friend's husband needs a loan, a line of credit. Now, he has an 800 credit score. He's just in an industry that we're not lending to right now. And had he activated on it 1 year ago with me, he's like, oh, I don't need it. My business is booming, you know. Of course your business is booming right now, but just do what I tell you to do. He did not listen to me, and now I can't help you in your stupid 800 credit score. So listen, please, I just urge you, because I just hate not being able to help people, and especially people that look like me. Come to the bank when you don't need money. Come to the bank when your credit score is at a 680 and higher. Come to the bank. Now, if your credit score is 680 or less, you can still come to the bank, and then I'm going to work with my counterparts because we may not be able to help you at this juncture. But come to us when it is working. Don't come when it's broken. Okay? Are we in agreement? Okay, great. What was that? You can come when it's broke, and you can come when it's not broken. We will still help you, but I just want to urge you, just if you're sitting here and you're like, oh, well, I'm doing all the right things and I don't need you, you need me, okay? You come to us right now.
Hello, my name is Jory Hawthorne, and we have a trucking company. I would like to know, are the banks able to extend a line of credit for companies that are into government contracting as far as purchasing products for the government versus us using a factoring company?
Don't walk away from her yet, because I have a follow-up. Tell me a little bit more what type of trucking.
We move general freight. We also do local moves and things of that nature.
So like big trucks moving products from A to B?
Yes, ma'am. General freight, yes.
Okay. I'm going to be honest. Your industry is considered very high risk.
Is that the industry you were discussing just now? Okay,
yep.
I kind of thought
a year ago,
that's what she was talking about, but I wanted to get clarification.
We could have helped you.
Wow. Okay.
What happened was during 2020, right? You guys, there was a boom for you guys.
Okay.
And a lot of trucking companies started buying a lot of trucks, taking out a lot of loans that they did not need to take.
Okay.
Now everything's open up again. Your demand is down.
Yes.
People don't need you as much.
Of course.
A lot of those truckers that took all those loans and expanded their fleets got all these trucks because of all this additional business that they thought they were going to get that is no longer needed, defaulted on their loans.
Oh, wow.
So because of that, now a lot of traditional banks are not lending to trucking.
Okay. All right. Thank you for the clarification.
Anybody else want to kick in on this?
You know, obviously trucking's a tougher industry right now because of all the economic issues. The other thing I'll tell you about all of us and just lenders in general is everybody, all of us look at deals a little bit different. So, you know, what one bank may say absolutely not to, you know, another lender may say, yeah, let's take a look, let's see if we can help you. I mean, everybody's situation is also different as well. So keep that in mind as, you know, as you're pursuing financing and pursuing options.
Yeah, I just want to kind of touch base on what you were also saying and what we also talked about here. You know, with the trucking industry, you know, if you've got historical financials that can support the debt that you're looking to place yourself in order to do what you need to do, if it makes sense, we're going to try to do it for you.
So I'm utilizing. We're currently with WIC right now. We're taking advantage of all the classes that you guys have. You have classes online and in person, so I'm getting
Correct.
as much information as possible when I'm able to get it. So I appreciate that.
Okay, and you don't have a loan with us right now?
Not at this time, no.
Okay, do you have a loan with anyone right now?
No.
Okay, yeah, well, get your financials together, we take a look at it. If you need, I don't know, 50,000 or whatever it happens to be, maybe it's something we can take a look at.
Thank you.
Sure.
From our perspective at the SBA, what we do is our job is to try to help in situations where it's a little riskier for a lender to take on by themselves. So what we do is we work with our partners here and we add a guarantee on it. So depending on the size, it could be 90%, 85%, 75% of the loan that we will take the risk on. And actually, we're paying the fees up to loans up to $1 million right now. So right now, it's not a bad, it's actually a good time where we're going to pay your upfront fees and your ongoing fees for loans up to $1 million. So not a bad time to take a look at getting a long-term SBA loan in place, or even we have some line of credit products too that we're actually working at trying to increase our guarantee a little bit on some of our express products to try to assist, because yes, risk is high in a number of the industries and we want to help you in that area. Are there any other questions? Sure.
So what were you trying to finance?
What else have in our company have our we have different certifications, and the city of Madison may need you to purchase equipment or anything, products for them. If you don't have the $50,000, we would need to get a factoring company or get money from a bank in order to pay for that from the manufacturer, because there's a net 30 or net 60, whatever it may be for that particular company. So whatever type of equipment or products that is needed at that time.
So this is only going to work for the right person, but I want to share this with you all as an idea. I'm going to tell you a brief story. We had a client, and it'll make full sense in just a second. So we had a client, they had about $17 million worth of real estate, about $11 million of loans out there. And U.S. Bank does as well. It's called an umbrella loan, where we kind of put a lien on all the real estate and refinance everything out. So we refinanced the entire portfolio. $11 million went to the previous debt. We net $4 million on that deal because we refinanced 15. $4 million, this individual took $1 million down south to Florida, and they're building houses now. They're netting $100,000 per unit. So that's off of $1 million. He then took $3 million and he invested it with us. And this is called double dollar investing. What this means is you put money in investments, you're earning interest, but then the bank is willing to give you a line of credit on those same investments. Sounds crazy, right? Then about $2.75 million is what he got in a line of credit. He took the $2.75 million and he purchased a corporate Learjet. And you and I will call it Airbnb being a home. He's Airbnb being a corporate jet. and he's making even more money. Now, don't be overly infatuated with like the big numbers, right? Like I'm just trying to share with you the concept. So I'm sharing all this to say because I asked her the question, what was she looking to finance? She said equipment. Depending on if you happen to have additional assets out there, you can then use those assets to be able to creatively come up with a way to buy the equipment that you need to yet and still do the business that you want to do. Her factoring cost 18%?
It's very expensive. That's why I asked her about the banks.
Sure. So 18%, let's put that another way, right? On $100,000, 18 grand, that's a lot of money. So what she's doing is she is battling, she's trying to figure out a way how to reduce that payment, how to reduce the interest obligation to put more of it in her pocket, because right now it's costing her $18,000. And there's many paths to kind of get there. You may have to massage it all the way through, but I just want to share that sometimes founders don't look at their personal assets as a way to be able to be leveraged to then buy business assets to then lower the cost that increases the cash flow for your business. So it's also important to have not only business representation, but personal representation, because in tandem, you'll be able to come up with some unique ideas. I hope that's helpful. Was that good? Okay.
I want to add to that. So I know for CDFIs, we don't work the same way as our traditional banks and credit unions, right? Depositories are not what motivates the loans that we do. Oftentimes, if we're not getting grants or low interest rate loans ourselves, our dollars don't spend the same as a bank. So what we do is we do require skin in the game. So Aaron talked about you putting up your personal residence or whatever asset that you have. That would be a requirement for a CDFI because we want to know that we're partners in this. If we're the only ones giving 100% to your business and you're not giving anything, it's a huge red flag. So the scenario he gave was a good one, and it yielded very positive cash flows for what he gave. But even in the fact that you're willing to step up and to put something forward makes your lenders respond differently to you. For us, sometimes you may not have a lot of equity, but it's the fact that you are willing to sacrifice because you believe in what you have and what you're presenting to us. So if you have something, look at what you have in front of you. What can you use as collateral? If the industry is risky, and right now the way the economy is, even the CDFI, I look and see what's going on with the economy every day. We risk assess our portfolio all the time because the risk is greater for us. So just like any traditional institution, we do the same thing as what's the industry saying? Will we get our money back? But if you have something that makes people a little bit more comfortable about structuring that deal, it may help you to get what you need. So I would take a look at it. Mike has offered that. I know I used to work at Wibbick. Sit down with him. If he can't do it now, he'll be able to help you figure out what needs to happen so you can get it done.
Okay. Sounds good. Any other questions out here? Okay, so one of the things, oh, we got one. Got it. Okay.
Hello. Thank you for your time. My name is Action Jackson, CEO of Jackson's Yard Care. So my question is, when I'm dealing with my personal banker that deals with my assets for my business, should I have somebody that's I can consider weighing out my options of the equipment that I have and the assets that I have to try to get a loan, to try to go after some of these bigger bids where I need some money down before I start a project? How do I go about that at my national bank, at my city bank?
So if I'm hearing you right, you're asking, do you need representation to figure out what you can put up?
Yeah, like somebody that's working with me hands-on. So I've been working with U.S. Bank for approximately, like, I believe 10 years now. And I don't feel like I have somebody personally that has my interests there that help me out with these questions that I have, because I came to them several times asking them for capital, some credit, and they denied me. And I'm like, hey, I got these assets, how can I waiver these? And I haven't got great answers back, and somebody that kind of work with me to try to get me towards the in the destination I need to be.
Well, so I first of all, I think that's very unfortunate because I used to be a banker. And I think that the education should be shared. If there's a way, if there's a question that you have, we should be able to answer that for you. However, there are organizations that you can go to. We have that work. We talked about technical assistance earlier, and it sounds like to me you need to work with a professional just to put your whole portfolio into perspective. SBDC, SCORE, there's institutions out here that you can sit down with, put down in writing what you have as your assets and your liabilities, and see where you land with your net worth, if there is something that you have that's tangible that you can use. So there are other people that would be willing to help you. If you can't get it from your banker, doesn't necessarily mean that there's not somebody else there who can help you. Have you asked that question? Is there somebody else I can talk to? Especially you being there a decade. I'm pretty sure there's somebody else that will be willing to sit down with you and figure out what you need to do to get what you are asking for from them.
Hi, I'm here to help you. I'm your business access advisor. I'm sorry about your experience, but I would love to meet with you one-on-one to figure out, one, learn more about your experience, two, figure out who your banker is. It could have changed, et cetera. No excuse for your experience, but let's figure out how to make it right, okay?
Sounds good. Let's see. Any other questions? One of the things that, sorry, I should have been back there earlier, so.
Hi, my question is, how should we be looking at some of these online banking institutions that come after the small business, offering loans and, approved ahead of time and all that kind of stuff?
Carefully. Very carefully read the fine print and make sure you get somebody else involved with that really knows what they're doing, that understands that fine print.
Okay.
Yeah, there's tons of offers out there if you're willing to give up something. Yeah. One of the things that all of us do is we look to you as a business owner to have your own support group. And one of those things in the support group is your banker. Another thing in your support group, another person would be an attorney. Another would be an accountant. Another would be other fellow business owners. You need people that are kind of experiencing what you're experiencing at the moment or have gone through it before. And people who are self-employed love to tell stories about how they got to where they were and what successes they've had. And they're not worried about giving up their secrets because they do it better than you do anyway. So I mean, that's the attitude of a self-employed person. I'm going to do a great job and I can share my story with you. So, take advantage of support and help. Again, Therese brought up the SBDCs. She brought up SCORE, that's also sponsored by the SBA. There's a lot of people out there that just want to help and they just want to give back. So take advantage of all those folks out there.
The technical assistance through SCORE, SBDC, WIBIC is free, but it's not really free because you pay taxes for it. So you might as well utilize it. So basically make use of those out there. And it's always good to have a person from the outside to give you a second opinion on your financial plan or your business plan, because I think much like you have financial planners doing that from a business plan standpoint, saying, hey, is there something else I can do? Like on your equipment basically we want to make sure that we elongate that out as far as possible for the repayment, because that helps your cash flow. So it's really what we're really trying to manage is cash flow, because I think you all want to get paid and you want the payments as low as possible so you can grow, because cash flow is really kind of the indicator of how you can grow. And but one of the questions that we received before was, and I don't know how many of you do, but who does lines of credit and what kind of things do you need for lines of credit? You're going to give that a...
Yeah, so Summit Credit Union is a lot of lines of credit, and especially for smaller businesses and even startup businesses. I think the average size of our SBA loan is a little over $200,000, so relatively small. The nice thing about the SBA lines of credit, it's a 50% guarantee, so that helps mitigate our risk. One thing that Eric was talking about earlier is collateral, and while collateral is important, in SBA world, SBA wants loans fully secured. What that means is you need to pledge all available collateral, but if you don't have enough collateral to fully cover the loan, SBA is generally okay with that. So what we would need for a line of credit, again, kind of the things that I mentioned earlier, a couple of years of tax returns, both business and personal if it's an existing business, personal financial statement. If it's existing business plans generally aren't required. They're nice to have. Projections may or may not be required either. It depends on what you're kind of looking to do. If you're looking to significantly grow, projections are a good exercise to go through, both for you as well as the lender, just to understand where you're going and how you're going to get there. But yeah, for lines of credit, the information that we need is not significantly different from applying for any other loan.
Sounds good.
Keep in mind when you're doing a line of credit, that line of credit is not to be made permanent working capital. So basically, you need to be able to pay that loan back within your cash cycle. If you can't pay that loan, so let's say, for example, that you're expecting that receivable in 120 days or whatever it is, you've got to be able to pay that thing down. If you can't pay it down, the bank is going to look at this and go, okay, well, it's been a year, you've had it outstanding, your balance is still at $50,000, you can't afford to pay this thing down, we're going to term you out. So we may turn that into a term loan because you can't rest that. But if you have the financial wherewithal to be able to handle it correctly, which means short-term usage of money, so you're looking at keeping this money outstanding for maybe 3 or 4 months, maybe 5 months, pay it down to zero. Take it out again in 3 or 4 months when you need it, pay it down to zero. Because if it keeps going long term, we consider that just like you came in to do a term loan with us anyway. And when you're looking to apply for a line of credit, you have to look at what your propensity to spend money and pay money back would be. And a lender's going to look at your personal credit bureau. And a lender's going to look at your open lines of credit out there. And they're going to look at your Citibank card. We're going to look at whatever. And if you never pay the balance down, we're going to look at it and go, okay, well, you don't pay your personal balance down. Why would you pay your business balance down? So, I mean, these are the hard questions we're going to ask as lenders because we want you to use it the correct way.
Sounds good.
And this is because it's a little different. So we do, like we mentioned, we do lines of credit. The only difference is at BMO, so we'll do backed SBA loans. We'll do conventional, but with the zero barriers to business program, there is no collateral up to $50,000. So I just wanted to add that.
So a lot of times when things don't go well, the business will call me and not you. And so the question I have for you is, when something goes wrong, maybe a contract gets lost or some receivables don't get collected, what do you as lenders want? Do you want to know immediately so you can work with a customer? How kind of take me through, because it's usually I'm in a situation where I'm getting a call. Hey, something's gone bad. I say, have you called your lender? No. I called you because I want to know what to do. And of course, naturally, we'd probably say you should call your lender, but maybe talk to a partner like a SBDC or SCORE. Some of them take them with them when they speak with you. But tell us, take the veil down. What do you want to do, and what would you see if a business is having an issue?
So if your business is starting to have cash flow issues because you're not getting your receivables, let us know as soon as possible. I've always told people don't run from your lender, because our ultimate goal is to work with you despite the way it may feel, because you asked for something. Now, right now, I'm not sure how I'm going to be able to give it back. Our job is to try to work with you to figure it out. The ultimate goal is to get the money back. So that if that means we have to restructure, we have to do a deferment, what we want to do is work with you to resolve that. And we're going to look at wherever those struggles are. Sometimes you will be surprised. It's just in the way you spend your money. And we may have to help you rebudget so you can get back on track. Even when you have net 30, 60, 90s hanging out there, your disposable income is there. It's just the way that you're managing your money. So talk to your lender. Don't run from your lender. If you're going to be late because somebody's late paying you, the last thing you want to do is not to let your lender know. We call you, we email you, call me back, email me back, because then I have to form my own opinion. Oh, okay, then. I see what's going on here. And if I don't get my money, then I have to call my attorney. We don't want to do that. It's taxing. It's easier to work with our loan clients. Our goal is to see every business successful. Every business. So if that means we have to make some adjustments, we will do that. But the key to what I said was, don't run from your lender.
Keep in mind also, and we have been an SBA lender since we first came about as a micro lender back in like the mid 80s to a long time ago, basically. But keep in mind again that with the SBA loans that we get guarantees on as lenders, the SBA guarantees that money. As Eric talked about, maybe it's a 90%, 85, 75% guarantee. But the money is still the lender's money. So if you come to borrow money from WIBIC, it's WIBIC's money you're borrowing. It's not the SBA's money. So the first call you should be making, even though you might not want to call WIBIC because we are your lender, we are the first place you should be going, because as Eric pointed out, if somebody calls Eric, Eric's going to say, did you call the lender? Because it's our money, whether it's BMO, it's US Bank, it's Summit, it's Legacy. It's our money. The SBA helps us to extend terms. The SBA helps us with the guarantees so we feel more comfortable, because business is risky. And that's why the SBA is here, because most banks wouldn't take the risk of doing business loans if the SBA wasn't there.
And it's not as deep as you think. Like, trust me, it's not. I sit on credit committee for CDFI, and we have real conversations, and people will send an email and just say, I'm going through a hard time. And we understand we're human just like you are. We put our pants on the same way. So give the details and tell like legitimately what's going on. Everyone can see BS. So we understand if like your dog ate your homework. Okay, we all use that excuse. Your dog didn't eat your homework. But if you come with like humility and give the real story, people are going to have mercy on you, and everything can be worked out. Everything can be negotiated. So just come and just tell the story. It's not that deep. Like she said, don't run from her. She's a human. It's not that deep. Everything can be worked out.
Sounds good. I did want to mention one thing. SBA is actually going through a process where we have PPP loans that were under $100,000. If you do have one of those, make sure you contact us for forgiveness. We want to get them forgiven. Starting 2 weeks, they will be transferred to Treasury. We've got a few thousands of these out here in the state, and so if you need more information on that, get a hold of me. But we want to get you that information and get that PPP loan forgiven for you. Otherwise, any more questions? With that, we've got about 5 minutes, so let's go and do like a 1 minute final comments. So, should we start? We'll start on this side.
If you want to know more about our Zero Barriers to Business program, reach out to me, or you can reach out to Aaron, and I can share more. I know I didn't have a chance to talk about it, but that we actually, through that program, do sponsorships. as well as we have a Women in Business grant that will be launching soon. Grant is free money, so we all like free. So if you want to know more about that, reach out.
Stay ahead of the game. Do it now before it's too late.
Stay coachable. If you have somebody who's working with you, listen to the advice that is given. Execute on the plans. That is going to be key to your success. A lot of what you get from everybody up here costs you nothing. There are consultants that will charge you thousands of dollars on what you're getting free. Stay coachable. Otherwise, we will back off too.
We're there to help anybody if you're there to help yourself. You got to help yourself, though. You've got to be able to put your own skin in the game. You've got to be able to show us commitment because we have to believe in you. Many of us lend to startup businesses. 60, 70% of the portfolio at WBIC are to startups. And it's for working capital, it's for equipment, it's not for real estate, it's for stuff that you need as a business owner. And it's with great pride right now that I also introduce somebody in the room. And he doesn't know I'm doing this, but I'm going to do it anyway. But we have WBIC's newest loan officer, Daniel Armstrong. Daniel, would you like to stand up? And Daniel, if you could share, why did you want to come to WBIC? You're going to love the story.
Well, I guess my story would start basically with the Wisconsin Black Chamber of Commerce. Just so you guys have a background, I help the community with credit coaching for personal and business credit there, and kind of just seeing the good work that's done in the community and seeing all of the resources that WBIC provides. I wanted to take my skill set a little bit further and understand from a loan officer's position what goes on so that I can help educate my community there. Beyond that, WBIC provides a lot of great workshops, a lot of great follow-ups, and a lot of great tools to just make sure we understand and we have the resources that we need as entrepreneurs to be successful for free. And so just, being able to partner with an organization that will provide you guys with all of those resources, it helps me do my job and basically give back in the way I wanted to.
Congratulations.
Okay, I guess my parting thoughts are, if you don't have a commercial or business banking relationship, please establish one for all the reasons that were cited. For those of you that were in the DBE contracting seminar earlier today in this room, everyone in the panelists mentioned that, establish a banking relationship. And again, look at us as partners. We're here to help. Use this as a resource.
Just do it, right? I think having the right people around you is going to be very important. And I talked about that earlier, your community, your village. And just take action. Despite what you're feeling, if you're taking the advice and guidance appropriately and continue to take action, trust me, what will happen is your confidence over time will grow exponentially, and then you'll surprise yourself. So just know that you're doing something special and it's for a purpose, and you got people that are willing to help you, and you'll be all right as long as you keep the momentum.
Let's give this panel a hand. Thanks.